Got a little SPY up here. 4 hour. Checking this baby out. It's be interesting. Pre-markets was up a little bit. Was up a little. Pulling back. We'll see what happens. Wanted to check this 4 hour though before I dip into these lower time frames. See what's going on. And I'll tell you what, there's definitely some bull div on the returns oscillator, but we all know what happens. These fishers lock up like this. So this move could continue to the downside. This is why I love using these three indicators together, because I see all these fishers locked up going to the downside, bull div on the returns oscillator, but the Z-score dipped down below the 99% confidence interval. Does it happen? Yeah, it does. You can see. Usually when it happens, I don't care if it's going across the 99% confidence interval to the top side or the downside, the resulting price action speaks for itself, especially when you get an outlier, right? Look at the DLP, right? Having these outliers. But specifically on the Z-score. So when you get an outlier down through these confidence intervals, that you're usually going to get, that Z-score is going to end up back on the top side again. That's usually what happens. Like you can see on this, especially an extended outlier, right? We had this little one right here, not too much of a pullback, right? When you get into the middle here, this is no man's land pretty much. You get a Z-score right around, you know, it's literally at the mean. So anything can happen. But when you dip down below or up above these things, it's usually pretty powerful. You get a nice move back to the opposite side. But then you got to remember, right, on all these indicators, most of them, we have inputs where you can have the Z-score of log returns, or you can have the Z-score of the price action, right? We like to use log returns, obviously, on everything. There's nothing I don't have that doesn't have that setting turned on, because I want to know what's going on with log returns. It's all that matters to us at Alpha Trading, because we know log returns make the move first. Price action follows log returns. There's just no doubt. We've proven it time after time after time after time. And so we take these indicators, right? Especially the returns oscillator, and correlate it, right? We correlate the returns oscillator to price action to let you know when this returns oscillator starts making its move, whether you can trust the read or not, right? Just because returns do something doesn't mean price action has to follow. Price action most times does follow. That's why we do correlation on here, to understand when that is going to happen, when the correlation is strong, positive or negative, right? You get a negatively correlated return oscillator, watch that. That is definitely a move you don't want to be involved in. You want to watch. You're looking for the strong blue candles, right, on the moves. That's what you're looking for. And of course, then when you start to diagnose the divergence, especially on these low time frames, let's drop to the 15 minute. You start diagnosing the div, right? Even on the 15 minute, right? On SPY right here. Bull div all over the place. Not the fishers, but we're talking deviation log pro, returns oscillator, Z-score on this 15, going into the end of yesterday. That's why the first thing I did is pop up SPY pre-market. I was like, SPY's probably going to be up. I'm like, it's not. It's down. Down, not quite. About a half a point. Not a lot. But this would be a good place for an early bounce. Let me see this VRE real quick. This daily range, we're not too far below the daily range. It's going to be right around this S2. This is the weekly S2 of the weekly price action volatility range for SPY. Did it get tested? It did not. Didn't even give it a chance. Now, there's been previous weeks where you'll have a pre-market move on SPY, where say that new weekly range was right here, and pre-market SPY just blasts right through it. Okay, tested the weekly range. This thing's probably going to dump. This area up here, especially yesterday, the daily range didn't even get tested. So you've got Monday's daily range, the new weekly range have not been tested on SPY. Bottom side, we're talking 422, 423 area. right in here. I'm looking for that area to be tested. Seeing that div. Let me see if it's on the 45. What's happening over here? Yeah, actually. There is. There's bull div for sure. And you're getting a nice bounce off this 90% confidence interval here. Yep, yep. Bull div. Bull div on everything. All four. And people that know me and know how I set up my chart, I do nothing. These four indicators right here, this is mostly all for divergence between returns and price action. Fisher's kind of an outlier a little bit. It finishes off price action in a normal distribution. That's what the Fisher transform is. If people don't know, research it. Understand, we bash traditional TA. We're not going to lie. It's absolutely worthless. It's being taught to the unwashed masses, right? Massive liquidity pool for these algorithms to feed on. This is what people don't understand, right? That's why we're trying to bring people into the fold. We don't have to share this information with people. We do this because we want to help, right? We cannot stand seeing retailers lose money. We can't stand seeing retail traders being taught really bad practices, especially with risk management, especially with leverage. If you don't see the scam that's going on, you need to open your eyes a little bit. Leverage should not be used in cryptocurrency. People are like, well, why? Leverage is to be used with assets that have no volatility. That's what leverage is for, to bring volatility where there isn't any, right? To increase your position artificially so there's money to be made. And that's why the last person I spoke to about this was like, I told him, he said he lost half of his account. There was like literally, I think a $1,500 BTC move that morning. Guy loses half his account. So immediately, first thing I say is, stop using leverage. How do I know he's using leverage? Because you're not going to lose half your fucking account on a $1,500 BTC move unless you're highly leveraged. He's like, well, if I don't use leverage, how do I make money? There's the problem. This is what's been set up by all these YouTube jimmies out there, man, that are part of this scam. Go look in their bios. Go look at all the links they have set up. They are literally unloading brand new, in most cases, retail traders on the leveraged exchanges for cryptocurrency, right? There's the first red flag right there. No. They have video tutorials on how to use leverage. I mean, guys, these YouTubers are getting paid by these exchanges to push this scam onto them. Even if they don't even realize it, right? Because YouTube Jimmy has been scammed.
Yep.
So it's massive and it's real, right? So come on. Let's get our shit together here. We got to realize these algorithms aren't using traditional TA to trade the markets. Period. The end. Right? They're using the distribution. They're using volatility. They're using the VEPS, volatility, entropy, probabilities, statistics. They're not using the relative strength index or stochastics or MACD. It is worthless crap. And if you've been using that stuff to trade for quite some time, you understand that. Why do you think people are always flipping around trying to find new shit? Because it doesn't work. It doesn't work. Do you get lucky? Yeah, you get as lucky as have your monkey throw darts at the dartboard, man. Pick a direction. That's pretty much what you're doing. If you don't know what's happening with the log returns, you are lost. Even though you don't think you are. You have no idea what's going on in the market. If you don't know what's happening with the log returns, you are lost. It's just a fact. So here we are.
You're literally better off letting a monkey throw darts at a board for you and going with that than using the scam TA. They literally will, their 50-50 shot is better than the 30-70 shot you get from traditional TA.
Oh yeah. There's things I know. I was close to a YouTube Jimmy. Probably closer than a lot of people were. It's scammy as shit. I know for a fucking fact how these YouTubers will use their fucking subscription base as liquidity, man. It's stupid. It's real stupid. Real stupid. But then you show a new retail trader, right, that's been being taught traditional TA, and then you show them a chart like this, and it's just like, whoa, what the hell am I looking at here? Well, you're looking at a couple different projections, right? This is a Laplace distribution projection, right? Two of them from the 48K high and that last week's candle. I'm starting one because I wanted to see. First off, this is because remember, this is the distribution of returns. Okay, this is the distribution of returns. There isn't a distribution of price action, right? It's just a distribution of the returns. And when I laid this projection and started seeing, look at the reverse mean, how it's staying inside down here, inside this Laplace projection. I didn't notice it till this morning, but I was just like, wow, that's pretty interesting. Mm-hmm. Now, this doesn't mean price action has to come down here, but with last week's candle, and look what happened the last time we rejected off the reverse mean log returns right here. New lows, all right, 17.5. I'm telling you right now, it doesn't have to happen. This is why we trade low time frames. We can sit up here and talk about the macro time frames all we want. Do we have a better beat on this than most? 100% we do, right? If you're up on these macro time frames, you're like, well, the 200 MA's here, the 50's there. Oh, what's the MACD telling me? You are fucking lost. You are so lost, right? You're up here on a macro trying to use that stuff. Hell, you can't even use it on a 5-minute, let alone a week. Things happen fast in crypto. This is why I mainly use these macro time frames for, is I want to see where the price action is. I am not basing trades off of this. I want to know where price action is in the distribution of returns. I try to gauge areas of where the mean reversion could happen. Almost nailed it on this, right? I was more up in this area. Remember, I was talking about 30K for a while. Well, it took longer than expected. Look at these rejections off of the 95.4 percentage range, Laplace percentage range right here. Right, it just took a little longer. Finally closed the weekly candle up inside it, and then boom, we get this nice move. Open up the new candle in this trough above the reverse mean, immediately rejected. Now we're back down below the 95.4. We're starting this new projection. I'm telling you right now, we could be messing around, and I'm talking about in maybe new lows, but right around 20K for the rest of the year. We got the mean. I'm looking at the reverse mean. Until I see a couple weekly candles closing above and see a trend change, we're down here. We're below this mean. And it's inside the distribution. Don't think this price action can't mess around and come down and test this 99.7 down here. Guys, look at the price of Bitcoin. You shitting me? I'm selling everything I own to buy more Bitcoin. I can't sell. I might sell Bitcoin to buy Bitcoin. I don't know if I could sell everything I own. If I can get Bitcoin at around 5K again, I'm just going to do a backflip.
Yo.
Why everybody is complaining about these markets, I'm just like...
But also, I mean, when you think about it...
Yeah, crazy.
We're losing it. Prices, if you remember, because obviously in 2018, if you all remember, like whoever was watching, like the returns were just flat, right, for like a long time. Though the volatility, whatever, but it was right around 6K for months and months until it plummeted to like 3 or whatever. For that bounce at the end of the year, right? But it was like at 6K for like a good number of months, like the better half of 2018.
Yes, it was.
No reason like, the returns can't stay also pretty flat and leave the price action just flat for a long time.
Right.
It's absolutely possible to do, especially when you have a volatile asset, right? And a lower time frame, super volatile.
Here it
Crazy
was.
moves all over.
All this sideways action right here. It was about 3 months.
Look at that. Yeah, it was like 3 months, but it was also like at 6K a few times before that.
Yeah.
Around there, you know.
Yeah, there was the first move right here, a little bit below 6 right here, and then we had that little pump and dump over that month right there, and then just sideways, and everybody's like, "Oh, here we go!" And once again, look how these weeks opened up above the reverse mean, opened up this weekly candle below. The predictor flips to the downside, 50% dump from 6K. Wham! Then what do we do? Go sideways, get up above the reverse mean, go to the top side, mean reversion. Mean reversion, mean reversion, mean reversion, bounce on the top side of the reverse mean, run to the first 65K high.
And look how many ridiculous triangles, just by visualizing it. Look how many ridiculous, like, fake lines of support and resistance and triangles and wedges and nonsense people would have been drawing during that time, and still are, and are getting wrecked every time it goes the wrong way.
Yeah.
Like, it's just unbelievable.
Oh, yeah. Like we were talking about the other day, like most of the time when you get these moves and it's literally riding a distribution level, right? Like the wicks, the bodies, the candle closes will be riding these distribution levels. And so what do people do? They'll throw a trend line. They throw trend lines on price action. And it's like, okay, do you understand what you're doing right now? Do you know that price action is just following the returns, literally mimicking one of these probability percentage areas? You're throwing a trend line on it. We know for a fact, like let's pretend that this distribution, this trend line right here, this is the 99.7 Laplace. Let's just say, right? You throw a trend line on this. And so what are these traders looking for? Right? You're looking for a breakout, right? You're looking for a candle close below that trend line. Okay, now we're going to dump more. Well, we know as alpha traders, hey, dummy, you're throwing a trend line on a distribution curve. And that distribution curve is at a 99.7% level, and you want to short that area. You realize there's a 0.03% chance that price action is going to continue to the downside? This is why people buy tops and sell bottoms, because they do not understand the distribution of returns. We do, right? It's not like we're trying to brag about it. It's just like we saw the light and we just dove headfirst in. We're like, this has got to be it, right? It's not the easiest thing to understand, but once you do understand all this, it's a game changer. We all know it, right? Real traders.
Yeah.
I'm not talking about the retail trader out there that's just in the echo chamber, right? Do we get them every once in a while? Sure. Do some of them make it through all the noise? Sure. Not many though. But you get real professional traders that come and find this, they're blown away. There's just no doubt. So, and this is what we've been trying to do. Is put this together for professional traders. This is stuff that has not been shared. People are always like, well, I can't find anything about all this. It's like, and you're not gonna. There's no. Do you think these big firms are putting this shit on YouTube or teaching people about this stuff? Hell no, they're not. They got this down. It's under lock and key, man. They don't want people to understand. Yeah. It's like people literally, you'll see them. People will tell you that algos are programmed to run off fibs. That's a fib, all right. A big lie.
That's a fib.
That is a fib. And it's like
that's gonna lie in someone's golden pocket.
Right. And where do they get this shit? From YouTube Jimmy. YouTube Jimmy's like, oh yeah, these algorithms and blah 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 blah. It's like, wow. Now, did I know what I was talking about at first when I got exposed to this? Like, I mean, time fucking flies. I think it's almost been like 5 years now since we all met Volatility.
Yeah.
Yeah, dude, it's been it's like we've got our degrees, we're in our honors stage, you know. Well, that's what it feels like to me. It's like 2 years away, the fucking doctor. Yeah.
Because you stare at all this long enough, it just clicks one day, doesn't it, Warlord? I mean, it just clicks.
Dude,
It finally comes together.
Yeah. I will say this, if anyone is listening, I say this to a few guys, like when they get a little bit distracted, is it took me 3 years to understand the definition of mean reversion in the market. Yes, I knew that the line went back to, I knew that the return oscillator went back to the mean, but I didn't know that that was its most powerful point.
Mhm.
Okay. Right. And it took me 3 years of not committing to trades going into the mean reversion point. So I'd only get like small profits, or I'd actually get wrecked because of negative drift. And we couldn't calculate negative drift or positive drift back then. So there's a lot of factors to it, but your long story short, what's going to happen is you're going to be like, shit, this is too overwhelming. And then the coolest line I did here was interest is earned. So then when you go back to your TA, you're going to be like, I don't believe this stuff. And then you're going to come back to your volatility tools, and then you're going to put the time in again. And then then I'm just going to say, quote unquote, give up for like 2 weeks. And you're going to come back. And you'll see that every day you just start building more interest in the subject, right? So that's the saying of interest is earned. And through earning interest in understanding just the volatility, percentage returns, that can get a bit confusing because there's like 6 rules. It's 2 plus 2. It's plus minus a plus a plus equals a minus, right? And then a minus plus a minus equals a plus. So there's a little bit of confusion in here, but that's all right. And then you're gonna go and take like another 3 days break and be like, oh shit, this is too confusing. I'm gonna throw it away. But if you just sit and learn and don't try trade this stuff immediately, sit it out for like a week and just go write notes down in a book, in a fucking book. If you handwrite it down, you'll know, oh, mean reversion, because I wrote it down in a book. I couldn't tell you guys the amount of cheat sheet I have from all the communities I've been in, right? I would just write down, this guy thinks that the 21 SMA on the 4 hour is the one, and then the 580 MA or whatever it is on the 1 hour. Like I'd write all of these things down, I'd go and back test them, and I'd even try trade them. And eventually you realize that it's just opportunities for liquidity, right? But anyway, so the volatility tools will help you know where your outliers are. It'll help you know when you have a very strong mean reversion. And that will come off your Shannon entropy, your AVR, AVP, and Pearson correlation. And if you can understand those 4 guys, you'll be very much on your way to knowing the limits of where candles can go. This makes sense. Anyway, I'll stop laughing.
Yeah, that's a great point. That's where that was just a great point. You start to understand why and when these candles are doing what they're doing. Especially, remember last week when we were talking about that new weekly candle opening up above the mean. It was the same time as the daily was mean reverting too. And I remember us talking. And look what happened. The daily and the daily ends up closing the candle below. Boom, dump. Right, from what were it, 24.5? Yeah, 25K or something. So yeah, poured lost like $4,200 off the price of Bitcoin. But now, what does returns do? They mean revert. Now we're below them. At some point, that's why I was even talking that I liked the RLMR on the daily more than I did on the weekly. Okay. That weekly is a freak show, right? I mean, we're way down. Yeah. Not that the PA has to follow that, but this daily, I like it. I like the daily to work its way back up, mean revert, get to the top side. At some point here, this market's going to turn around. I know the world looks like it's burning down, but the world always looks like it's fucking burning down. People let the news affect their fucking decisions in the markets. It's ridiculous.
There's a general rule that I go by, and I'm looking here in this African continent. The world can only burn to the 12th Laplace distribution level.
Right.
And from there, it's stop unburning. You can't burn the same house down 12 times in a row. So something's got to change.
Yeah. And this is what's great about this RMLR. So I just showed you the weekly, showed you the daily. Look what happened when we look on the 4 hour. 4 hour closes that 4 hour candle back below the reverse mean, goes sideways while that daily and the weekly's figuring its shit out. But if you were smart enough to be looking at the 4 hour while all that was happening, it was probably a no-brainer that we were going to get that spill out. And now look at the 4 hour. The 4 hour's done it first. Right? Back up above. Now we're above the reverse mean. So now, does the daily start to follow those returns and mean revert? Yep, we're going to have to see. We're going to have to see. But yeah, that's why the more, and that's what people don't understand. I mean, how long we've been using the reverse mean log returns? I mean, behind the scenes, we probably had it for, I don't know, maybe 4 to 6 weeks before everybody, but it has not been out very long. We are all new to this. And I'm at it every free minute I have. This is one of the, obviously, I've stared at all these indicators forever.
Hours, 10,000 hours, one indicator.
Yeah. So I'm locked in on the reverse mean log returns. I'm just, and why? Yeah. I'll just pull this up. I'll be doing other stuff and I'll just have my chart up. I'm just looking at it. I'm looking for tendencies. I'm just looking for different signatures of what's happening with price action when it gets up to the reverse mean, right? And it is so, it is an incredible indicator. It really is. I mean, you like right here, you get a wick right into it. Rejection, no thanks.
There's a lot of trend happening from that reverse mean.
Yeah.
This one we're looking at, like pivots, monumental moments.
It is an
for
amazing
long-term structure.
You know how to read it. When you get to a third normal distribution, a third standard deviation from the reverse mean log returns, there's a very high chance that is going to pivot, right? It is going to revert towards the mean from that point forward. It very, very rarely does 2 candles in a row or more beyond the third standard deviation. And in fact, most of the time it just wicks beyond it and pulls back even during the candle. But if it ever even closes above it, it's extremely rare that it pulls 2 candles in a row above or below a third standard deviation, and it will generally begin a mean reversion of one type or another, whether that's the price action going up or down, whether that's the mean moving up or down. There will be a mean reversion in the coming candles. Like it just it will go to the mean, and very often it'll either bounce up or bounce down from the mean. And very often it'll walk through to towards the next 3 standard deviation, wherever that is, top side or bottom side. It happens very regularly. So when you see a third standard deviation move, and it happens on low time frames, you can get it. You can get a few of them even in a day sometimes, or more. So it's quite a nice indicator for catching tops and bottoms if you want to know when to begin a mean reversion move. It's incredibly powerful. And then with the direction predictor on top of that. It's just that direction predictor is incredibly accurate on like low time frames, like the 1 minute, if you have it set right and everything. It is just a very powerful tool.
This is the kind of signature, like right around in here, right? 90 minutes kind of going sideways, mean reverting on both sides. But right up here, and I'm sure if I looked at the charts, right up here, this 90-minute candle closes. We open up one on the bottom now after getting back up above, right? Close that 90-minute candle above. This one stayed above. As soon as this candle opened, it repainted, right? I'm looking at the charts. I guarantee you I go over there. There's something in the VEPS charts that is saying, yep, jump on this move. Not only did the predictor on the 90-minute flip, but I mean, it's just a no-brainer. It's a no-brainer on these moves. I mean, you literally could trade this chart. I don't recommend it. We all know I like people to learn the basics of volatility trading, right? Which is going to be, let's pull it up. Where are you, little pro chart? You, the volatility, right? Boom. So this is the chart we give free to people just so they can dip their feet into the deep end. Yes, this is the deep end. This is not the shallow waters anymore. You are swimming with the sharks. So you start to learn about the volatility percentile and the correlation it has to price action, right? With these moves, like this volatility expansion, right? Right here, right about there, boom. So your the move starts, this down move starts because the volatility contracted, positively correlated. And then what happened? Right? Volatility expansion, correlation breaks negative, finishes off the move. And because it was a massive volatility expansion, you got this big 90-minute candle. Wham! So yeah, and then we throw in the alpha laser returns. This is an indicator showing you the returns. This is where you can start to learn about the divergence between returns and price action. That's why we have put this together. Right now in the 90, there's literally nothing. This is actually a really interesting little signature going on here. What time is it? Oh yeah, it's open. Hold on, boys and girls. Let's jump over. Let's check SPY out here.
Ooh, we got new things printing. Oh shit, oh shit.
Ding, ding, ding. What the fuck? Yeah,
We're up a bit.
there it is right there. The daily range is 413, 413. Pretty tight. Talking a buck. It's right here. Boom, boom. Right where I thought it was going to be. So this will be interesting right here. We reject here. SPY rejects here off of the new daily range. Could go to a lower level. Maybe pick it back up to going into the end of the week to test this area up here. Or we just blow through, do it today. One way or the other, this area is going to get tested. Now, obviously, this is my opinion. If it happens today, that little white cross right there, that is the start of the 95.4 Laplace distribution to the top side on SPY. So if you see SPY at 422 today, you know it did a 95.4% move within the distribution, which is always powerful. In a day, you do a 95.4 Laplace move on a daily candle, it's good stuff. Powerful move. Usually you're going to get some continuation with that. Because you got to think about what BTC is doing to these probabilities. We've talked about this a million times. Think about if you don't know anything about the probabilities, how fucking lost you are, man. Even when you know the probabilities. Hey, we're dealing with Bitcoin. Bitcoin's a beast, man. We've seen it. We've seen it go so far outside the distribution. It's incredible with this recent move, right? With the recent move to the all-time highs. I mean, just went way outside. But what happened? When everybody's like, here we go, bull market, boop, 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 boop. When it was on its way up, right? I had it predicted. But I was using numbers coming from the distribution model. When I was talking about these 6-figure numbers for Bitcoin when we were making that run. Did it make it? No, it didn't. You want to see why? I'll show you why. Let me reload this baby up here. Meow, meow. All right. Holy shit. Right? Does it seem... God, doesn't time fly? Holy Christ. Time goes so damn fast.
Talking about her, where is she? Yeah.
Yeah, man. Let's bring... Here was the move from 10K. Right? Let's bring our PB2 back here and I'll show you exactly what I'm talking about. We're going to throw it on this candle right here. Boom. Yeah, because that price was, like 10.7. 99 dollars. 99. Oh. Does Bilbo like that number? Yes. Yes. With main projection. That is not it. There we go. And I don't want Yeah, that'll work. Boom. Okay. Let me turn off PB1.
Can you put on PB4 for us, please?
PB4. Can we see PB4?
Yeah. Oh, sorry. Like the band to the upside, just to see like you're railing through the.
I don't even have the one that's got the. Now this move up here. If I threw the 99%, the 99.9999999, I get
That's
it's
the guy I'm looking at. Yeah.
yeah, it probably caught it. It stayed within that distribution, but when you're just using
Anyway.
the 99.7 area, look at price action. Get outside of it, right? I mean, we even got this down. Look, a little bounce off the top side. Powerful. This is a no-brainer. Okay, you get outside the 99.7 Laplace, there's a 0.03% chance that this data set was going to stay out here. What's more likely to happen? Well, think of it like this. There's a 95.4% chance that we come back down and visit this level. Did it? Sure did.
I understand now.
So we come up, it tried right here, but then boom, we got that relief to the all-time high at 70, right? Up there around 70, 69 something, whatever the hell it went to. I know this is the index. The leveraged exchanges, I'm pretty sure went to 70, really close. Spot, I think spot was more down here. But anyway, you can see, found some support on the 95.4. But what happened? Rejection off the reverse mean of log returns. And so now you're looking at, okay, there was a 95.4% chance this area gets revisited. There's a 68.3% chance this would. Has it been fully retested yet? No. Could the reverse mean right here kick it down here? I'm looking at it. 16, right around 16K, new lows. Could it happen? Sure could. And if it does start to happen, now is this a long projection? It sure is. Is it valid? It looks pretty valid to me. I like it because I'm using it together with the RLMR. And I'm telling you, if this rejection works out the same way it did up here, guys, this thing could mean revert, right? We're talking back to 10K. I would give me 10K Bitcoin, please. I can do a lot with that. That'd be lovely. But this is why we use this. You can throw these projections on the pivot of any price action. We've done this a million times. And you see why price action just gets halted in its tracks. Let's take a peek right here. When after the first pullback from 65, we'll start a new one, 58. All right. Sorry, 99, you're my favorite number, but we're going to ditch you for a minute. All right. We make a move up almost to the 95.4, right? Comes back, rolls over to the dollar, tests the top side of the 68.3, bounces. Comes back, finds support again. Even had a big wick through it. Look at that wick though. So we're talking about distribution projections. We have current candle distribution levels too. So the current candle on this weekly, look at the wick right to the third standard deviation. That's a 99.7% move, even though it's normal distribution, right? Laplace distribution doesn't have standard deviation levels. It just has probability percentage levels. Well, the probability percentage level at 99.7, the third standard deviation is a 99.7 of normal distribution as well. So let me see here. So this price action comes back down, literally from the beginning of this move, comes down, mean reverts and bounces. But you can see, you move that wick down to 99.7. Look at the pullback. It pulled back up inside the 95.4 Laplace. Why? People don't understand why you get wicks like this. Because the probabilities. Who shorted right here? I guarantee it. Who shorted? Oh, big trending move. Let's do it. Wow, I got fucking wrecked again. I mean, that's why we don't buy tops or sell bottoms, even if we're intraday trading, right? When you get to a certain area within the distribution of returns, hey, you're not looking for that side of the trades anymore. If we're down on the bottom side of a 99.7 Laplace move in an intraday trading, say on the 15-minute, am I looking for short scalps anymore? No. I'm looking for hella long bounces, right?
An options contract by the mean.
Yeah. So here we are, alpha trading, spreading the gospel. Just, there's a lot of people that would rather dance with the devil these days. Fine, we talk about it all the time. This is why we opened up the Discord. We want to expose this to people without having to pay $10 a month. We had a paywall to keep the trolls out. If they come now, we're just going to ban them, right? Because there's a lot of goofies out there, right, that don't like what we're doing. Hey, that's fine. You don't have to like what we're doing. You don't have to do what we're doing, right? We do this because we want to help. Do we care if you... Do we really give a flying shit if you adopt this? No. Well, why, Bilbo? Because you're liquidity for us, Goofy. That's why. That's why. Open up, man. Do you understand what we're doing here? The knowledge that we are literally trying to share with these retail traders. Why? The problem is these people have been scammed over and over and over. They've bought numerous amount of indicators or trading courses, right? Haven't done shit for them except confuse them even more. And so here's something new. So people are really wary about it. You're not going to hear YouTube Jimmy, preaching about his teaching package, saying he doesn't give a flying fuck if you buy it or not because you're liquidity on the other side of my trades. You're not going to hear them say that. That's where we're at. That should really, really, really open up people's eyes. Did you hear what the fuck these guys are saying? Maybe I should look into this a little bit. It's like, oh, you think? This isn't a scam. We're literally trying to take you out of the cult. But that's not how that works, right? When you're in a cult, you can't tell people you're in a cult. Hey, grass is way greener over here. You should get out of the cult, right? YouTube Jimmy's got you drinking the Kool-Aid, man. You have to get beat up. You have to leave the cult by your own. You have to see it. And
Don't get Stockholm syndrome.
Yeah, then you'll make the change. But until that happens, you're just never going to see it. But I'm telling you right now, you drop away from all that traditional TA and watching these goofy fucking dumbasses on YouTube. And hey, you can throw me in that pile if you want as well. I don't give a shit.
Yeah. What up?
But we're literally trying to help people here. We're not blowing smoke up anybody's ass. All right? We're not trying to lead you onto some leveraged exchange. We're telling you not to use leverage. We're giving you proper risk management strategies, not the same risk management strategies that every retail trader in existence is using. They're just one big blob fucking massive liquidity. And all these people are putting stop losses in the system on an exchange that's trading against them. Let that sink in. So you and all your buddies that have been taught the same risk management strategies on where to put stop losses, which is stupid to begin with, you're all putting them in the same place. Do you realize that these exchanges have algorithms that recognize when there is a certain percentage of traders on their platform that are either highly leveraged, all have their stop losses in a certain position, and whammo, the algo kicks in. Why do you think Bitcoin has all these dumps and these pumps and things like this? Right? I'm telling you. And a lot of people don't realize, well, they're like, well, why does everything just dump across the entire market? All the exchanges. It's called ARB bots, man. Do you know how much when one exchange starts to dump, right? Do you understand how fast these arbitration bots are working and how much fucking money they're making?
It's stupid.
This is what creates all that equilibrium across all these exchanges, because you have these high frequency ARB bots making it happen, man. There's one exchange at this price. They're buying, selling over here, selling there, buying here. I mean, it's just happening so fast. And that's why all the exchanges are doing exactly the same thing. It's not like Elon Musk with 10 trillion Bitcoins is fucking selling them across fucking 1,000 exchanges at the same time. That's not how this works. It's arbitration bots that create all this madness. And the retail traders just get ran over like a fucking semi, man. This is what we're trying to do. We're trying to make people aware of how this market's really working. I don't care what market it is. And if you're addicted to leverage, go trade 4X, right? 4X, a percentage move in 4X over a 30-day period, Bitcoin does in a 1-minute candle. Do you realize that?
Yeah.
This like volatility we're talking about. This is why you don't need leverage in Bitcoin, man. The volatility's there.
You just need the right tools.
You just need the right tools.
Tools and product, like the minis.
Yes. There you go.
Well, you also need to be on the right side of the trade, but that happens when you know how to read the information.
For sure.
Yep.
I have found these things work on the minis and the futures perfectly.
Yeah.
Because the volatility is there too.
Oh, yeah. It is. And
Oh, yeah.
It's wild too, because remember, I mean, even little as 5 years ago, remember talking about, I mean, it was just like markets were not correlated at all. SPY and the minis, they're all doing their own thing. Bitcoin's doing its own thing. There's a lot of institutional involvement, right? That literally, I think that these big institutions got into crypto and are like, oh, this is normal. Oh, well, fuck it. Let's bring this to all the markets. Because, yeah.
Let's whip that arbitrage bot out from 1980 and switch it on, because this is legal to do with certain arbitrage bots on crypto versus, stocks.
Yeah. Okay, so where are we here? Check this out. SPY's trying to make a little bounce here. You look on this 90-minute.
I'll
tell you what, I'll be watching this last Fisher flip up here. Let's see what happens here on the 90-minute going into the end of this day. The variance isn't as low as I'd like. Look at the volatility, though, man. The volatility just dropped off a cliff on this 90-minute candle, and it's negatively correlated. That's why you're seeing a 90-minute candle just floating up. The predictor flip, too, going back into randomness. This actually could be a move. Let's see here. I mean, look at the wick right to the bottom of the daily range. This is what we try to show people. Hey, what are all these levels? Actionable ones. You're not used to it. It's okay. Take a breath. We'll explain it all to you.
Actionable.
I mean, it's like there's levels here that just make sense when you're talking about volatility and the distribution levels. Yeah, that's why people are like, well, why'd this candle do this? Why'd that wick stop there? What I can show you. There's a chart I can pull up. I might have to like shuffle through some time frames, but there is a reason. There is a distribution level there. And every time somebody's like, oh, well, it hit this fib level. I'm like, well, you got lucky there. That fib level was right at the 95.4 Laplace on the weekly. So that's why it bounced. Got nothing to do with your damn Fibonacci. If we're talking about creation, here, I'll talk about Fibonacci all day. I love it. There's a lot of good things with Fibonacci. Hell, it's literally the basis of everything in creation. But when we're talking about the markets, I mean, come on, man. Come on. That's just more foolishness. And so right now, SPY is trying to bust through this daily level here. And I'm telling you, SPY closes a 15-minute candle above the 68.3 Laplace on the daily. This white cross right here. Maybe we do make a 95.4 Laplace run today, because this is definitely looking strong. That's why I'm over here. Everybody knows I like the 90 and the 45. And the 90 is actually looking good. I mean, usually when you get a big contraction like this and the correlation breaks and you start floating up, that this correlation will probably dive a little deeper Maybe the next 90-minute candle floats too. We get some more floating up, contracting volatility negatively correlated, and then that ebb and flows into an expansion of volatility, which usually comes when volatility falls off a cliff, and the correlation will break positive. The DLP, right? We talked about it earlier. Bull div. Bull div on the DLP. Bull div on the returns oscillator. Not so much on the Z-score, but we have been down in the lower confidence intervals for a 90-minute chart too long. Too long. By the end of the day, this baby should be popping out of here, going to the top side. Let me look at the 45. Yeah, all the fissures on the 45. The predictor's up. Volatility. Yeah, this is interesting. When's this 45-minute candle close? 13 minutes. No, that's not it. Where the hell is mine? There, 22 minutes. All right. So we're not going to catch it, which is fine. Because, man, volatility's coming in. It's negatively correlated, though. This is interesting here. But I'm seeing a ton of bull div on the returns oscillator and the Z-score. Yeah, you can that's why you can see that correlation just jumped up a bunch, now down. And you can watch it fluctuate with the price. It's a riot. It's a riot. I mean, if this volatility right now were to shoot to 100 and you see a significant negative correlation, this price is going to drop like a rock. But I do see that correlation just flipping around. Yeah, I like the fissures, though. The fissures are up. Everything on this side of the chart, I love. The volatility just needs to, that correlation needs to break. Yes, it does. Not really setting up any hidden bear yet either. I mean, tiny bit. Just setting up, right? We all know until you get candle closes, till you get a change there. I mean, it's just setting. Just setting up. And like I said, I like the 4 hour. 4 hours just speaking volumes to me. This thing's going to move to the top side. This thing is going to move to the top side. But that expansion of volatility on the 90 needs to book up onto the 4 hour because it's starting to head back into positive correlation. And on this 4 hour close, I would imagine if SPY closes up above the 68.3, you will see all these fissures flip up, and if that happens, the volatility is going to kick up, heading back into positive correlation. So that's what we're looking for. That is definitely what we're looking for. Oh, nice. Always wanted a bunny in the chat. What's up, Grand Bunny? But yeah, the bull div on the 4 hour, I like it. I like it. SPY's actually looking good. Let's be honest. It was having a good run, right? It was having a good run. I don't think it's over. I really don't. Really don't. 15-minute. Boom. Right? Volatility expansion positively correlated. All that bull div I talked about at the beginning of the stream on the 15. It was coming in from yesterday's move down. Especially when it's the pre-market. The pre-market move is the low on the returns oscillator and the Z-score. Just makes no lower lows the rest of the day, while the returns oscillator and the Z-score just starts climbing, and you're getting a bounce off the zero mean, which, as Warlord just talked about earlier, that was the click. Boom. Is it important? Yeah. Go back. Look at the oscillator on divergence moves, and you get bounces to the top side or downside off the zero mean. What happens? You get big candles, man. You get some moves coming.
Yeah.
It's just a fact.
It's that catch. It's catching the volatility wave. And yeah, if you can base it off of a mean that's like on your candles, and your indicators can hold above the mean by the candles, then you can go look for a bullish div, for example, and vice versa. If you have a daily VRE and your indicators and candles are closing below your daily VRE, start looking for like bearish divs. I'm not saying for the whole day. I'm just saying when it's in the region of, let's say, 0.3% difference, away from the mean, you can go look for bull divs there for serious continuation until next daily open. It either comes back to meet the new daily open, or it can get stopped. And as soon as the new daily open prints, there'll be a little bit of mean reversion for that daily to see if I can get there. If I can't, then it just carries on with its trend, whichever way. But yeah, these tools are spot on. If you just put in the time and the effort and understand that you're going to get confused, there's so many of us that can answer your questions in multiple different ways. So there's a lot of good perspective in here as well. So if you maybe not understanding my perspective, you ask for Bilbo's perspective. If you don't understand Bilbo's perspective, ask for Yasha's perspective. Ask the math guys. Ask MJ. You know,
Yep.
as you know, as everyone starts to get building and stuff like this, yeah, I think it will. I think people coming in should be perfectly fine. There's enough people here to attend to any questions you guys need.
Oh, hey guys, what's up? Good morning. Sorry, my phone was freezing. I was gonna say hi, but then yeah.
Yeah, man.
No worries, G. Awesome. Glad to have you in here.
Yeah, for sure.
I've been here about 6 months. I'm a former market maker, and I'm telling you, these guys are spot on, and they will help you any way you need. Anybody in here.
Bro,
Element
Take a minute to
this
learn.
is why, this is why I like Solana people way more than fucking ETH. Like in Ethereum people, you will hardly see anybody helping people like this. I'll be honest.
Well, I mean, we trade anything. We trade anything, to be honest. We trade Solana, we trade Bitcoin. Some of us trade ETH. You know, we trade all kinds of things. But yeah, like, I mean, we're here to help people learn how to trade properly using, you know, actual math-based tools and not garbage TA, which is just such a scam. And,
but it will work on Solana.
Yeah.
No, like, I mean, like Solana people are more genuine. Like I haven't met any like what do you call it, like yeah.
Oh, I agree with Solana people.
But hey, guess what? I met your founder for Catalina Whale. The guy he went the red. I forgot his name, but I met him at VCon.
Oh, Michael or Carlo?
Michael.
Yeah, Michael Ross George, man with 3 names. Yeah, he's great, man. He is a hustler.
Oh yeah.
Yeah,
He I'm a little taller than him.
Oh yeah, Michael. Yeah, man, he's short.
Yeah. Very icy.
Yeah. Cool dude. Loves the surf. Can't get enough of the waves. So yeah, he's a good dude. Real good dude. But yeah, before we wrap this up, I'm just looking at this 15-minute. You can see right now, right? This is the current candle. This is the Laplace distribution bands. And it is attempting to close above the 95 for Laplace. Talk about this all the time. And so then I'm down here, I'm looking at the volatility. It's expanding, positively correlated. Close this candle above this 413.65 area. That's usually good grounds for some continuation on this 15-minute chart. Look at the entropy. Entropy's flashing. The predictor's flipped. So if we close up above this 95 for Laplace in the next, well, we got 2 seconds. So we did. Barely, but we did do it. But now, look, Laplace bands flip up. Now we're right on top of the 68.3. That's usually a good sign. So what's up here now? What's the 95 for? 415? Interesting. Of course, it's going to take a quick little dump. I want to see if this entropy drops back into trend right now. If this entropy drops into trend, this and the volatility, it's got room to expand a lot. So all the fissures are locked up. I was talking about all this bull div, having an outlier on the variance. And the DLP is about to break back to the top side. So keep an eye on that. Keep an eye on, let's see here. I'm going to stick to my guns. This is a tough area, though, because you got this weekly support level for the weekly volatility range. Look, did that wick go right to it? That's a green dots right there. Yep, right to it. Rejected. Is what you want to do, like I said earlier. Close a 15-minute candle above the white cross line here. That's the daily 68.3 Laplace distribution range. You close that candle up there. This is going to make a late day run. Maybe 95 for Laplace. You're going to have a little resistance here, though, at the first standard deviation, obviously. because normal distribution wise, that's the 68.3% level. And when we talk about those levels, that's telling you there's a 68.3% chance price action does not exceed that level. 95.4% chance price action doesn't go above this level. Normal distribution wise, this level. We get up into this area today, weekly and yesterday's daily volatility range has been tested. Important area. If SPY cannot get by this area, this baby is going to turn around and just freaking drop like a rock probably. Now, why do I say that? I'm looking at, because Bitcoin and SPY highly correlated, and Bitcoin right now is rejecting off the reverse mean of log returns. Last time it happened, new lows, right? We talked about this for literally almost 10 weeks when everybody was going, Bitcoin's dead. Like, yeah, well, we'll talk about that after Bitcoin fucking mean reverts up here in between like 25 and 30K. Did it happen? Yes, it did. It took a couple extra weeks and I thought we were going to mean revert up here at around 30. Price action followed the returns, mean reverted right here. We opened up the new weekly candle in this trough on the top side of the reverse mean, which was good. I was telling everybody, watch this area. If we reject here, we could sweep the lows or bring in new lows. There's no doubt about it. It could happen. This is an important area for sure. So keep an eye on it. And because the markets are pretty damn correlated, I want to see if SPY ends today, if SPY makes that push, it doesn't have to be today. It doesn't have to go up and test that area today. But let's say we close up there. Even the daily R1 up here, let's say around 416 today. Maybe we just a nice slow climb. Tomorrow, I would be looking for this area up here, 423 area. So let's see what happens. You can see what's happening right now. And I'm telling you, this has a lot to do with what BTC is experiencing. I mean, we're rejecting off of this weekly level right here and the daily volatility range. But this area will get tested this week. So let's keep an eye on it. Other than that, we'll be back tomorrow morning, 9 a.m. Eastern Standard Time. Thanks, everybody, for showing up. If you're new, glad to have you. And we're here for you guys. I'll see you guys.
All.
Yep. See you guys.
Have a good